The big news of the day, that is CPI data. Some relief on the macro front ahead of next month's Monetary Policy Committee meeting. Retail inflation for December has eased to a 4-month low of 5.22%. This has been helped by lower food prices. Economists and experts were expecting retail inflation between 5 to 5.3% range. Meanwhile, December food inflation eased to 8.39% from 9.0% in the previous month. Now, we have been speaking to a whole host of economists and trying to make a sense of this data because it is important ahead of next Monetary Policy Committee meeting. What cue the new MPC will take? How will this shape the RBI's monetary policy now? What can be expected for next fiscal year? Here's what we heard from Bank of Baroda's Madan Savnavis and HDFC Bank's Sakshi Gupta.
I think that 4.8 to 4.9 average inflation is achievable at this stage for FY25. The imported inflation bit, the impact of that, tends to be very small on domestic retail inflation because of the way the basket is structured. A lot of the items included are, domestic services and goods, and the feedback from any sharp depreciations in the rupee, A, are very small, B, they take a longer time to kind of feed through, right? So I think that the 4.8 number close about there is achievable at this point.
When we have the MPC, which is meeting next month, they would actually be looking at four numbers, the previous four numbers of inflation, all above 5%. So it will be interesting to see as to how they actually view this inflation. Even though the trend shows that it's coming down, it will probably definitely come down to around 4.5% in the fourth quarter. Is this enough? Does this give them enough comfort to take any action on interest rates? How the rupee has been depreciating. I think the major concern which we could be having here is that imported inflation is something which would increase. So while food inflation would come down, there would be this potential threat of core inflation going up primarily on account of imported inflation moving up. Because that's something which poses quite a few conundrums, because what we have seen since last week is that the rupee depreciation has been much faster than what we have seen earlier. It does look like that the RBI may be allowing the rupee to go according to the market forces for a certain period of time.